One of the companies that are an MCE this morning reported news that it's getting bought out, and the stock is up 140% this morning. And I talked about this company without revealing it in this video. Let's have a listen to this piece.
Another example of a company. The stock is down 90% from the recent high. Do you know that revenues of this company over the last few years went up fourfold? 4 times. 4 times. Have you ever seen a company that was not overpriced? Revenues went from here 4 times in a few years, and the stock is down 90%. 90%. I wanted to buy a lot of this stock at 10 times higher than what it is today, but I didn't have money at this point. Now the stock, because at that point I wanted to pay this much for it, and I thought that there was an easy 10x. Today, the stock is down 90-something%, which means that if I was happy paying 10 times more for it because I thought it had an upside of 10x, from here it has an upside of 100x. Nobody wants to buy it because they're fearful when others are fearful.
Okay. So I am happy in one way. So this is the chart of this company, right? This and this. And then this morning, there's this jump, right? 150%. So one message is that they beat this down. It was trading for 1 times revenues. And they just sold it, or the transaction still has to close, for 4 times ARR, annual recurring revenue. So there's so many companies out there that will get bought out. And as you can see, the buyer of this company is being greedy when others are fearful. And they are willing to pay 155% higher price than the stupid idiot public investors are selling. So whoever was greedy recently, made quick buck. The part that disappoints me is that this is a company that will be worth 100 times more than what it is today, but somebody else is going to benefit from that. Somebody else, meaning whoever buys them out. Because the market is so horrible that companies like this that need to grow don't get any respect. And if they needed extra money, like let's say all they needed was probably like $2 million extra to reach profitability, but because the market was so horrible, didn't care about the quality of this company, the dilution was going to be 20-30% for raising that extra 2 million to reach the profitability. And so apparently what it looks like is that they decided that it was better for shareholders to sell it at 150% premium, give shareholders liquidity so that they could take their money and put their money somewhere else. Because if let's say even if those people bought the shares at let's say 70 cents or even at the dollar, whatever, and now the buyout happens, they lost a little bit of money here, but then other ideas maybe went down 90% or 80%. So then those shares buy them a lot of something else, right? Or if they were greedy when others were fearful and were buying the stock today, lowering their average cost, they would have made money. But the point is that a lot of this kind of stuff is going to happen. Buyouts are going to happen. And then the stock is going to go after sitting there for months and months, or after declining months for months. I see something happening on Oracle. The buyout eventually will happen. And then boom, it will happen and it's too late. You can't get your shares. But another note, what I think is going to happen with this particular company, based on the initial response that I'm already seeing from some of the shareholders, I don't think that this buyout is going to be approved. And I think that the buyers are going to have to pay a higher price in order to acquire this company. So we'll see. But as of this morning, the stock is up 150%. We'll see what happens. So I don't know. It's your choice. You can continue being fearful when others are fearful, or you can go out and look for deals. And my offer is still on the table. If you want to be part of Microcap Explosions, the discounted price is in the description below.